welcome back. You're watching The Money Show, and I have with me now Gautam Kalia, Head Super Investor, Mirasid Sher Khan. Gautam, good evening. Welcome to the show. We are also connected by our first viewer, Hardeep Singh from Gurdaspur, Punjab. Hardeep, hi, good evening. Thank you so much for sending us your question. Hardeep, as per your details, I can see you have Tata Gold ETF Fund of Fund, you have Nippon India Small Cap, you have Motilal Oswal Large and Mid Cap, Quant ALSS Tax Saver. You're investing 5,000 so far in all of these funds. And for how long would you want to invest?
Ma'am, 10 years.
Did you say 10 years? Okay. Would you want to step up your SIP also?
Yes, ma'am.
Okay. What's the corpus that you're looking at? Any idea on that?
Ma'am, actually, I want.
Hardeep, can you please repeat?
Hello.
Yeah, I can hear you now.
Hello.
Yeah, Hardeep.
Yes, ma'am. Can you hear me, please?
I can hear you now. What is the corpus that you're looking at?
Ma'am, I'm looking about 2 crore rupees. And
2
how much I have
CR?
to invest for that?
Okay, sure. We'll tell you how much is needed to invest, and if not now, then how can you step it up? Gautam.
Yes.
Yes. So, Hardeep, I'll just tell you what you should do with your funds. First, you got Motilal Oswal large and mid cap where you're putting in 2,000 rupees. So, from an allocation perspective, can I please shift 1,000 rupees to the large cap scheme of Nippon India Large Cap Fund. Nippon India Small Cap Fund, you should continue. Quant ELSS Tax Saver Fund, you should shift this to HDFC ELSS Tax Saver. The Tata Gold ETF Fund of Funds where you are 1,000. Here, my suggestion is that you move 500 to ICICI Prudential Flexi Cap. That way, you get more large cap exposure and flexi cap exposure in addition to the portfolio that you have. So that way we are adding about 2 funds and replacing 1 fund. So that's what you should do. 5,000 rupees per month. If you put for 10 years, I'm just doing a quick calculation here. Just a sec. You'll have to do at least about 30 to 40,000 rupees a month with step up to be able to reach closer to 1.5 crores plus. So I think what you should do is, because your target is 2 crores, maybe you start with 5 the way you are now and try to add as much as possible every year so that you can get closer and closer to your target. The other alternative way is that you increase your duration. Instead of 10, you can probably stretch to 15 or 20 years. That makes a exponential impact on the growth in your portfolio. So that's what I suggest that you do.
Hardeep, you definitely need to increase your investment amount if it is just 10 years, and if you're not able to do that immediately, not a problem, you can do it as and when, but you also have an option of increasing your time horizon. Anything else you want to ask, Gautam?
No, ma'am. Thank you.
All the best. Gautam, let's take Bharat's question. I think this is a question via email, and he says that he's 47-year-old and expecting corpus of 20 CR for his retirement. And okay, so he's got a couple of funds. I think you have all the details, all the fund details on you. And he wants to exit from PGIM and Axis Mutual Fund that he has in his portfolio. PGIM mid cap he has, and Axis mid cap also, and investing in Quant and Motilal mid cap and Tata small cap. Okay, so should he consolidate? How do you look at the strategy that he's thinking about?
Yeah, so I agree with Bharat. I wish he would have come to this idea or come on the show a little bit earlier, because for the last 1.5 years, we have been recommending and directing clients to build a large cap heavy portfolio. But unfortunately, we see a lot of clients gravitating towards the fast-paced returns of mid and small cap space, which obviously have delivered very good returns, except for the last 6 months where the corrections have started. So for Bharat, what I'd say is that the existing SIP of 1.7 lakhs could end up creating a corpus of nearly 17 crores. But since you want 20 crores in the next 20 years, you'll probably have to increase your SIP amount from 1.7 to 2 lakhs plus. This should grow at 12% for you to reach that 20 crore target. If you alternatively, you could increase, your SIP by 3% every year, starting at 1.7 lakhs. And this would also help you achieve your target over the next 20 years. When I look at your schemes, you're on the right track. Like I said, Axis, you should move out of. So I just tell you scheme wise what you should do. Mere asset large and mid, you should continue. PGI mid cap, you should shift that to Edelweiss mid cap fund. Axis mid cap fund, you should shift to ICICI Prudential blue chip fund. Nippon India small cap, you should continue. Axis small cap, you should shift to the Tata small cap scheme. SBI focus fund, you should shift to the ICICI Prudential focus equity fund. Parag Parikh flexi cap and IPO technology fund, you should continue. Motilal Oswal Nasdaq 100 ETF, while it's good, even the other one, which is Motilal Oswal S&P 500 index fund, that's good. It depends on your the amount of exposure you want to the US, because you've got 30,000 rupees a month going here. You could move collectively about 13,000 out of this and move it into ICICI Prudential blue chip fund. Since you don't have a dedicated large cap exposure, so
Right,
that's a
Gautam.
gap. Yeah.
Okay. Quickly, Gautam, we have our viewer on the phone line connected, Harry. Hi, good evening, Harry. How are you?
I am doing fine. What about you?
I'm doing good. Thank you so much for sending us your question. So you say that you have 1 lakh to invest every month for the next 12 months and you're expecting a return of 12 to 15% CAGR, and the time horizon is almost 5 to 7 years, and for that you need a mutual fund portfolio suggestion. Is that right?
Yeah, correct.
Sure. Okay, so you're confused about mid cap and small cap due to high PE, and for next 12 years you're also expecting 12 to 15% CAGR. So Gautam, is that possible looking at the kind of market trajectory and movement that we are seeing now? How can he so 5 to 7 years I think is also a very tricky time frame, to expect this kind of a return. What will you say, Gautam?
Yeah, so typically anyone investing for less than 5 years, we suggest on equity funds, but over 5 years, we are comfortable with suggesting equity. So HDFC large cap fund, I would say 35% allocation, Bandhan Core equity fund, 15% allocation. Mid and small collectively will take a 20% allocation with Kotak Emerging Equity Fund and Nippon India Small Cap Fund. And ICICI Prudential Flexi Cap Fund and HSBC Value Fund will collectively take a 30% allocation, with Flexi Cap getting the bulk of that, which is 20,000, 20% allocation. So that's how I would build the portfolio now. Since you're building it, I'm assuming that you'll be doing a staggered investment. If not, then request you to consider staggering or adding more if the market weakness in the market continues.
Sure. Sure. All right. That's the recommendation to you, Harry. All the best. And with that, it's time up on the show as well. Gautam, thank you so much for taking your time out today. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.